Guys, you would not believe how much regulation is literally setting the stage for crypto to explode. And I think that 10 to 20 years from now, we're going to look back on 2025 as being a line in the sand for crypto, just like we look back on 2004 being a line in the sand for Web 2. That's where I think Facebook IPO'd, Google bought AdSense, which originally brought advertising to the internet. A lot of things happening in crypto that I'm gonna go over here. So per usual, I'm gonna give you guys my full macro picture. So let's get right into it. So I like to refer to this every week. If we look at the fear and greed index, we can see that things are neutral. Like I said, it's the summertime. Fund managers and institutional investors, they are humans too. They like to take their family on vacation. So historically, summer isn't the most explosive time for markets, but it is a good time to get ahead of the curve because a lot of people log off. So it's a way to get ahead from a mental standpoint, from a research standpoint, which is what I'm doing here. So like I've been saying for the past few weeks, I do expect going into the fall to see some fireworks, and especially going into 2026 after the things that are being passed from a regulation standpoint that we're going to cover later in the video. If we look at the ETF inflows for crypto, you can see that Bitcoin was trending high. Bitcoin's the orange, and it's kind of been falling off as we're going into the summer. If we look at them on their own, you can see the trend kind of falling for Bitcoin ETFs. And the crazy thing is that even though the ETF inflows have been dropping, which are these orange bars, Bitcoin's price has still been rising, which is the gray bar, right? And if we look at the Ethereum ETF on its own, same thing here. The ETF inflows has been dropping. We even had a negative month where we just saw outflows of 26 million, but Ethereum's price has still been rising against it. Looking at the usual macro indicators that we look at, you can see the U.S. central bank balance sheet is still dropping, so the Fed's still offloading debt. M2 money supply is reach all-time highs again, and I've talked about this a few weeks ago. Bitcoin's price mirrors the liquidity that's in the system. Liquidity is the lifeblood, and I've talked about this in many videos. Liquidity is like water, and assets are like the boats that go inside of the water. No matter how big your boat is, if it's not enough water to hold it in, you're not going to be able to get in and out. And large players, institutions with the big boats, they like to have enough water, not just so they can get in and out, but so that they can get in and out without being seen. Like picture putting a ship in a lake versus putting it in the ocean. The ocean is big enough for everyone to fit. The institutions, they don't like people knowing what they're doing, what trades they're making, so they can make waves without anyone being able to feel the waves, without anyone being able to see them or predict what they're doing. So the more liquidity we have in the system, the more institutions are going to be able to play, and it's also that allows them to be able to buy without experiencing major slippage. Like this is like having a big boat with not enough water, and your boat is scraping the ground, and now you're having to pay for your boat, right? Slippage is extra fees that you have to pay because it's not enough liquidity. Because once you go to buy, since it's not enough liquidity, you're not able to get as much as you want it. So if you want to buy $100 worth or $100 million worth, you might get 99 million and some change because your order pushed the price up, right? And the same on the other side when you're selling. If it's not enough liquidity when you're selling, you may want to make a $100 million sell order, but you're actually getting, 99, 98 million or some change because there's not enough liquidity. So having more liquidity in the markets is good. And, I know we talk about printing money and, nothing's all good, nothing's all bad. Printing money does dilute the value of your dollars, but that's why it's good to invest so that your assets is outperforming inflation. And crypto is the best place to do that right now. If we look at gold, you can see it's consolidating near all-time highs. People buy gold to hedge against risk, and it seems like Bitcoin's kind of doing that same thing because throughout the World War III scares a few weeks ago with Israel and Iran, we saw gold pump a bit, and Bitcoin still held up pretty well. So I expect this to drop as the Federal Reserve, starts to lower rates and other things like that we're going to get into later in the video. Here's another good sign here. We have the S&P 500 just created a new all-time high, right? We're on the weekly chart. If we look at the daily, it's just been pumping for like the past week straight. If we look at the Dow, things are pumping. If we look at the NASDAQ, it's at all-time high levels as well. And here's what's really interesting. Apple is the largest company in the world, and it holds most of the weight into the S&P. So it says a lot about the economy when Apple can be down this much from the highs, but the S&P can be at an all-time high. All right, now if we look at Bitcoin, you can still see it's kind of consolidated. Well, it's technically trending downwards. We have a high here, we have a high here, we have a high here. So lower highs and we have lower lows, right? We're on the daily right now. And I think in order to confirm a trend reversal, we have to break and retest and continue to create higher highs and higher lows like we were doing here, right? So technically Bitcoin is trending downward, but we're still above our 62 EMA, which is our rolling Fibonacci, this orange line, and we're still above our 200, and our 62 is also above our 200, which is still good. And anytime you see the 62 above the 200, it shows that Bitcoin has bullish sentiment. So, and once they cross, you see what happened here, right? Ethereum is still coiling. You know, it was at almost 3K on June 12th, but now it's down. But a lot of people are calling for like, oh, Ethereum's not going to come back, da 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 da. That's just not true, in my opinion. If we look on DeFi Llama, which is an aggregate for all the chains and what's happening on them, etc., you can see Ethereum is still the top by a long shot. In all of DeFi, it's $111 billion in total value locked. And of that $111 billion, $62 billion of that is on ETH. The next competitor is Solana at only $8.4 billion. So Ethereum has over 6x the liquidity of just the next competitor. And no one's even close. So to say Ethereum's not coming back, it just doesn't make any sense because it's fundamentally undervalued. Right? One of my favorite quotes by Warren Buffett is that in the short term, the market's a voting machine, and the long term, it's a weighing machine. Right now, people are voting that ETH's not going to come back because nothing exciting's happened, da da da. But if we look at the actual fundamentals, and now that it's more accessible for companies to buy ETH via Ethereum ETF, they're going to eventually get smart and see that Ethereum's undervalued, and it's going to outperform Bitcoin like it always does. I'm going to give you guys two key pieces of news here. So we have Tom Lee, who's a Wall Street legend, right? He's aiming to create the MicroStrategy of Ethereum. So MicroStrategy, they raise a lot of money via debt to buy Bitcoin. So before the Bitcoin ETF, a lot of companies were buying MicroStrategy as a way to get exposure to Bitcoin through the stock market, right? And Tommy Lee was appointed to the chairman of the board of directors of Bitcoin miner BitMine, right? Effective on Monday. And they announced a $250 million private placement to begin buying Ethereum, which it aims to make its primary treasury reserve asset. This is a Bitcoin mining company wanting to make Ethereum its top treasury asset.
I'm still a big fan of Bitcoin because I think it is, digital gold. But what we've seen in the last, really in 2025 is the financial services industry and crypto are converging. And it really started with stablecoins, which is the ChatGPT of crypto, right? Because it's viral adoption by consumers, businesses, banks, and now even Visa. Underneath the stablecoin industry is Ethereum. That is really like the backbone and architecture of stablecoins. So it's important to create a project that essentially accumulates Ethereum to essentially protect and have some influence on the network. So that's why we're creating this treasury vehicle to buy Ethereum. The more Ethereum that's accumulated, the more secure the network is. And I think it's also sort of the architecture that future banks will have. When Goldman issues a stablecoin and JP Morgan doing it on Ethereum, as a layer one blockchain, they're going to want to secure it by staking Ethereum. So we're trying to get in front of that by creating a treasury vehicle.
So if you haven't heard, Circle went public, and normally when the IPO happens, the token dumps after before it recovers, because the founders and the people who've been building the company for a long time, they want to essentially take some profit. However, Circle has been doing really, really well. And if you didn't know, USDC, which is Circle's stablecoin, is built on Ethereum. So in all those transaction fees, Ethereum is making money off of every single stablecoin transaction, in addition to Coinbase and in addition to Circle. Let me show you another key piece of news to show you why I have a strong feeling Ethereum will do extremely well this cycle and hit all-time highs. So on June 17th, the Senate passed what's called the Genius Act, right? Now, what the Genius Act does is it allows approved financial entities to issue stablecoins. They must be fully backed and regularly audited, and unregulated stablecoins can't be sold on US platforms, right? So you're gonna have a lot of banks creating these stablecoins, right? And Circle is already shown, stablecoins is crypto's killer business model. Like it's the best business model. The company Tether, they are the top company from a profit to employee ratio. They have like 30 employees, but they make billions of dollars per year. There's no other company in the world that has the least amount of employees and makes as much money as Tether in terms of the ratio. And the reason why is because they say it's backed 1-to-1, like stablecoins used to be backed 1-to-1, or maybe they didn't. But once you go on Coinbase and you buy USDC, they take your actual dollars and they go and buy government debt, they go and buy commercial paper, they go and buy Bitcoin, and they're doing all these things to get a yield on your money, and they're not passing that yield off to you. So banks are gonna want to create stable coins. So we're gonna see a lot of different stable coins pop up, and this is kind of similar to what happened to US dollars back in the day. Like the dollars used to be called the greenbacks, and banks used to be able to create their own currency, but then the US dollars, which they used to call greenbacks, ended up becoming legal tender, and it did away with all the other stable coins. That same thing might be playing itself out here. I would be surprised if all these stable coins are gonna be around 10, 20, 30 years from now. I feel like the next administration is going to come in and just declare one of them as being legal tender. So whichever stablecoin you're going to be able to pay your taxes with, that's going to be the one that's going to be around long term. But I'm kind of getting ahead of myself here. The whole point is we're going to have a lot of stablecoins being issued, which is going to increase the value proposition for Ethereum, because Ethereum's already been proven, right? It has all the TVL, and it's going to make the price of Ethereum go up. Here's another thing. Ethereum shorts are at record highs, right? This chart goes all the way back to 2022. You can see the shorts. So think about this. Exchanges are casinos. They can see all the orders and they're in business to make money. So if they see all these shorts, they can have their market makers and do different things to essentially liquidate people, because they make money off of those liquidations. So if everyone's betting short on ETH, they have every incentive to make ETH's price rise. Right, and now this will drop Ethereum in the short term, because it's going to cause a lot of forced selling. But eventually, like I said, Ethereum is going to rise. It's a matter of when, not if. And it's the same thing on the upward position. Once we have all of these leveraged longs, they have every incentive to drop the price of the asset. But right now, Ethereum shorts are at record highs, so they have incentives to raise the price of ETH. Going back to the charts, if we look at the total crypto market cap, we're still above our 62. We're still trending upwards. Long term, but in the short term time frame, you can see a downtrend here, right? It's the summertime. And if we go to the weekly, we're actually trending upward, right? So like I said, the short term time frames show the trend changes, but the long term time frames show where things are going. And I always compare this to ships and jet skis. Like a big ship, when it's in the ocean and you turn the steering wheel all the way to the left, it's going to take a while for that boat to move, but you can see the propeller under the boat move immediately. And that's the difference between the short and the long-term time frame. Just like when you turn a jet ski, it's going to move immediately because it's small, right? So if we're looking at the total crypto market cap, the short-term trend is down, but even when things are trending upward, right, sometimes they trend down for a while, like this. But overall, we're still rising. We still have our 62 above our 200-day, which is bullish. And if we go all the way out to the monthly, we're still trending upward. If we look at stablecoin dominance, it's going down. That means people are getting out of stablecoins and into crypto. So this is Tether. It's been trending downwards. And if we look at Bitcoin dominance is still trending upwards. I've been saying this in every single macro video that I've been making for the past few weeks. We need to see this drop so that liquidity can flow into Ethereum and then altcoins like we have every single cycle. Now, this cycle isn't, in my opinion, going to be the same way in that all the altcoins are going to rise. Like most of them will, but I think it's going to be certain narratives like AI and RWA. You know, it's just markets to scale, right? As markets get bigger, it takes more multiples for things to rise. And since people are buying Bitcoin ETFs, it's not as easy to sell Bitcoin and go into an altcoin, because you have to go from one whole other system, right? You're going from the traditional financial system to crypto. And if we look at the ETH to BTC ratio, we still haven't broke out yet. We started to pump upward, but we rejected off of this line. We started to trend upward, right? We have a low here, then we have a low here. We need to create another higher high, and we need to get above this line like how we were here, right? So still a ways to go, but it's a matter of when, not if. Utility trumps store value all the time. All right, so some more macro news that's huge, guys. So Fannie Mae and Freddie Mac are ordered to consider crypto as an asset when people are buying mortgages. So we've all known someone who's buying a house, and like in the past, people are selling their crypto and they'll buy stocks or just hold cash so that they can get a bigger loan. But now people aren't going to have to sell their crypto when they want to buy a house because it actually counts towards their revenue. And not even just that, it's just the concept of this being able to happen. We're literally seeing DeFi and TradFi integrate, and this is just more and more proof. This is actually really huge, guys. Another thing that's really important. So according to the Federal Reserve's June 18th, 2025 economic projections, policymakers expect interest rates to fall from the current 4.25 to 4.5 range to around 3.75 to 4 by year end, indicating 225 basis point rate cuts ahead. So these are the remaining FOMC meeting dates in 2025. We have one at the end of the month. We have one in September, October, and December. And a lot of people think that the Fed is going to start lowering rates. Guys, we have inflation down, and once rates drop, it's going to make the cost to borrow money cheaper. The cost, once people are borrowing more money, is inevitably going to find its way into asset classes such as crypto, which is going to make the prices go up. So I think 2026 into 2025, 2026 is really setting up to be an explosive year with all of the laws and regulations and things that's happening. So now, guys, let me get into another bill that just got passed narrowly 2 hours ago. As you can see, 2 hours. It's July 1st. This just got passed today. The U.S. Senate Republicans narrowly passed Trump's big, beautiful bill. So first, what is this bill? This is a bill in Congress that includes tax cuts, spending programs, and a debt ceiling increase. The House passed it on May 22nd, and now the Senate just passed it. So what does this actually mean? So whether you believe in the CBO or the White House, the truth is that the bill is going to create a massive surge of government money into the economy, which means more spending, more borrowing, and more liquidity, which is everything the markets need to go higher. This bill also raises the debt ceiling, and not by a small number, by $5 trillion. Guys, this means that the U.S. government is now allowed to borrow more money without running into a legal limit. So now the Treasury is going to be able to issue more bonds, raise more cash, and keep funding programs without the risk of shutdown. So why does this matter? Well, with the debt ceiling lifted, the government has a green light to keep borrowing and spending, which adds to the overall liquidity of the economy. So guys, Trump is really paving the way for crypto to flourish in these next 4 years. Like these next 4 years is going to be the best time to create generational wealth. And not even just that, now institutions are getting involved. And mainstream institutional adoption can only happen for the first time once. In 2025, like I said in the beginning of the video, that is going to be the line in the sand where that environment was created for institutions to finally be able to step in and really raise this market. Lastly, just some other cool news that launched. Robinhood officially launched their Layer 2 blockchain for stock trading in Europe. And guess what? The Layer 2 that it was launched on was Arbitrum, which is an Ethereum Layer 2. That increases the bull case for Ethereum even more. Just to let you guys know what a Layer 2 is, I've explained it in many videos. A blockchain has 3 layers. You have a consensus layer, you have a data layer, and then you have an execution layer. All 3 of those things right now for most blockchains are happening on the mainnet, on the layer 1. And any blockchain is in the business of selling block space, just like an airplane is in the business of selling seats. If you only have one plane going from San Francisco to New York, the seats are going to be expensive because everyone's bidding on that seat and only a certain amount of people can fit. Whereas if you have multiple planes, the price goes down. This is exactly what layer 2s do. The consensus layer says what's true, right? And this is a proof of stake. It used to be proof of work for Ethereum. Bitcoin is still proof of work. The data layer is the storage, right? It's what chains the blocks together. And you have these, this is why you hear about all these shards, these parallel sharding, where you have a blockchain running alongside to free up storage space because it's being stored alongside. And you have the execution layer, which is the settlement layer, the computational finality where everything goes through. Now, whether if you're launching a L2 to offer stock trading or an NFT or a money market, a borrowing and lending platform like Aave or a decentralized exchange like Uniswap, anything that's built on a blockchain, whatever that transaction is, it's competing to get inside of that next block. So what layer 2s are doing is helping to free up block space to have all the execution, the computational finality happen on the layer 2, and then it submits it to the layer 1. And that's why you hear about optimistic rollups and ZK rollups. What they're essentially doing is rolling up all the transactions, and they compress them into the smallest packet of data possible, similar to when you compress an email. Like you zip the email up and then you send it off. It's a smaller data. Like if you, some email files you can't even send over email because it's too big. You have to compress it, and then once the person receives it, they unzip it, and then they have all the data. It's the same exact thing with the layer 2. It compresses it all up, it sends it to the layer 1, which is the Ethereum mainnet, and now it's able to handle all those transactions at once. Just to give you one last analogy so you understand this. It's just like when you go to a bar. When you go to a bar, imagine how much worse of an experience it would be if you had to wait in line and swipe your card every time you grab the drink. You open up a tab, right? You get your drinks, you get your food, you get your buddies a drink, you get your pals a drink, right? And then you say, hey, I want to close my tab. So you pay for all those transactions at once. So now you don't have this long line, and it's a better experience. This is exactly what layer 2s are doing for layer 1s. So now that you understand what layer 2s are, Robinhood launched their layer 2 built on Arbitrum, which is an Ethereum layer 2, right? So that people can now buy stocks via blockchain. And this is going to open up more liquidity for the US. And I'm pretty sure a lot of other exchanges are going to follow suit. They're probably going to build their layer 2 on Ethereum as well. And why wouldn't they? Because now they just went global. Now Robinhood, they're not just serving people in the US who want to buy stocks. They're serving people in Europe who want to buy stocks. So all those trading fees, now they're going to be making a killing on trading fees because everyone's going to be buying and selling. It all opens the opportunity for market makers to make more money, because now you need more market makers because you're going to need more liquidity because you have a whole nother continent buying stocks, right? So guys, this is huge. So with that, if you had any inkling that crypto's dead or Ethereum's dead, hopefully that cleared it right up. A lot of things happening behind the scenes, and there's new updates coming every single week. I'm sure next week is going to be something even crazier that happens. So if you like this kind of content, like, comment, subscribe, share with a friend. Help us reach 1,000 subscribers on this channel. And if you want to join a community where we're all trying to seek opportunities together and take advantage of the best opportunities that DeFi has to offer, go ahead and click the link in the description. You can either book a free strategy session with me to see if our paid program is a good fit for you, or you can just join the free version of our community where you get other cool things as well. But with that, thank you so much for watching. I love every single one of you who's tuned in, and I will see you in the next video. Take care and trade safe.